Hey guys, Jason here for ChartGuys, taking a look at our coronavirus tickers. And before we get into these individual names, I just want to address an email. I got a rather upset email from someone yesterday that they were displeased at our integrity, essentially, for posting videos after the run had already started. The individual was quite upset that we didn't find these names before the run had started. And I assure you that if I knew that APT was going to have a 200-300% run in the course of a week, I would have done a video, and I certainly would have bought most of the shares over here. But that individual is missing the point of these videos. I'm not covering coronavirus tickers because I think that they're great and they're going to keep them going and you're going to make a ton of money on them. I'm covering them because they're incredibly dangerous. And if you're going to play them and you're already in a position and you're Googling for information, or you're on YouTube trying to find some information about a position you have, I want you to see my video and I want to tell you how dangerous that situation is, and that since you're already in it, I'm going to do my best to guide you on what price action will indicate what scenario and what outcome you might face in your position. It's all about protecting your money and using technical analysis to recognize early changes in price action. I just want people to trade carefully. These are very, very dangerous names. And as we saw today, we can have a huge run up and we can have a huge sell-off. What is this? About a 20-30% sell-off in a day? Incredibly dangerous. So if you think that the videos here are encouraging people to buy them, or we're just trying to get on the bandwagon, you're kind of missing the point. Protect your capital through technical analysis. That is what we teach at ChartGuys. And there is always a beneficial pattern. I shouldn't say always. There's often a beneficial pattern inside your trading action that you can use technical analysis for in order to capitalize on your gains. So I'm going to spend a little bit of time just focusing on technical analysis. I'll try to point the timestamp out in my video comment if you want to skip ahead and just talk about or listen about these coronavirus tickers. But let's take a look at Roku, for example. Roku on the daily time frame, a beautiful wedge. We also have a 4-hour channel. And if we go to the 5-minute time frame, early today, we can see that we had a nice tightening range, a beautiful equilibrium. Let's even zoom in a little bit. Right there, out of the gate this morning, a huge, beautiful tightening range. We know from the daily time frame that we are against an area of support. An equilibrium tells us there's a moment of balance, and then we can use that information, all of these levels that we have intraday, to look at a breakout, a pullback and consolidation, and a 5-minute higher low, and then it's off to the races. So a beautiful example of using intraday technical analysis and key levels and understanding what the price action is doing in order to find good entries. CGC today was another example. 5-minute time frame, we saw a little bit of a run early in the morning, some uncertainty in the market. We saw a tightening range. We broke out of that, set a new high above 23.18, and we just continued on. So all I'm doing in these videos is trying to point out what you could expect early morning and what that might mean for your trading day. So let's get into APT. APT yesterday, we pointed out some key levels and we said that this is a bearish reversal candlestick. We talked about scenarios to the upside and to the downside because you need to be prepared for everything. And we said that if we lose $7 right away, that's going to be a bearish signal and we're going to look for continued downside. So on the daily time frame, we see that bearish downside has certainly continued. We're going to be getting into oversold territory very, very soon. We don't have a lot of support levels left for us at this point. Next one is going to be 519. So what happened on APT? Let's go look at the 5-minute time frame. Here we saw a run up in after hours. We lose a lot of that. Out of the gate this morning, we open above and crash right through 7 support. We get a nice 5-minute oversold bounce. There it is. We bounce to our EMA 12, which is typical for a bounce, and then we just see rejection after rejection after rejection and overall weakness and lack of interest in buying. So if you were holding a position from yesterday and you opened and you smacked right into 7 and you blew right through it, that should be a signal that you need to cut your losses. And instead of maybe, let's say for example, instead of a $500 loss, if you didn't sell, you're looking at a $1,500 loss. I don't know the example, but my point is we use these levels to indicate what the likely outcome is. In this case, we end up with this big, nasty red candle, a slow bleed, which means our hourly time frame has had a lot of time to consolidate. We're not in a bear or a bear flag or a reversal pattern. We're just sort of rounding out our bottom here, trying to determine what's next. So what we can do is go look at that 519 level, zoom right into the 15-minute time frame and say, look, we got a little bit of support here. We have no signs of strength or the market turning around for us. And in fact, with Apple and the overall market being so strong and no negative news coming out for the coronavirus itself, that's going to be all bearish for these names. So tomorrow, if we lose 545 and 519, we're going to look to our daily support levels. And the only other thing that we have in mind for our major support level is going to be the lows of these individual days. Because we move so quickly, we don't have a lot of support established, and that's just sort of the way it is. The only hope that we have for APT and its kind is to look at hourly levels and look for oversold bounce opportunities. We did not get oversold, so a quick flush tomorrow, get this hourly oversold conditions in place. We may see a little bit of a bounce. We may not. Really, that's the only optimal thing that I could see for a potential trade right now. LAKE, similar setup. We said that if we had a loss of 1470, that's going to be a bad sign for the bulls. If we go to the 5-minute time frame, what happens out of the gate? We see pre-market gains are given up. We bounce off of our support level at 1417. We crash through it, we back test it, and then we get pinned down by EMA 26 all day. Just market weakness, loss of a key level, and not even consolidation, because there's just a lot going on here. We did not get oversold. We see no signs of strength on the daily time frame. What are we looking at for support? The next support is at 1305. So the only way that we can pull this through is to get some nice pre-market levels early on, see if we can get a bull sign of bull strength, knock out those pre-market levels, and see if we can start changing some trends. Bulls have a lot of proving to do if they're going to get anywhere to the upside on these names right now. NVAX, this was a little bit of a confusing chart, and we didn't even get a good opportunity to crash through some support levels, but we did establish a new one today at a low at 7, so we're just going to call that 7 psychological. So what happened yesterday? Well, let's go look at our 5-minute data. Here we see our close. We see a relatively good base of support. I probably called this a triple bottom or something like 865. And I suspect I said if we opened above that and tested it and it held, it's going to be in a good way for the bulls. However, automatically, first thing in the morning, we opened below and closed below. We saw weakness and we crashed through our low of pre-market, which is a useful support level for us, before we saw ourselves a nice 5-minute oversold bounce into EMA 26 and then sideways action. So on NVAX, a similar situation. We're not massively oversold on any of these time frames. Maybe the hourly is getting close, 30.33, with that $7 support. So the only way I could see a potential move for NVAX right now is if we open above 7, hold it, and then move to the upside and take out whatever our pre-market high happens to be. Assuming, of course, that that pre-market allows us to stay above 7 and open above 7. CODX on the daily time frame. Similar situation. This one looked more promising than anything else with a big green candlestick. And if I remember correctly, we closed very close, or the pre-market level was very strong right up into the end. However, we didn't see any of that follow through. So we saw a red day today. It's an inside bar technically. So the only thing we can look for is going to be a break of the highs or lows, giving us some indication. If we open below, then we have low of day support from the 27th, which is 235. And then after that, not really much to work with. So let's go to the 5-minute time frame and see what's up. There's that action. Rush into the afternoon, last few minutes of the day. We opened and closed our after hours pretty well. Pre-market was down, set a new high, and then just started trending down. Our high of our early morning was 305. We never came back to test that. We got into a little bit of sideways action with our low at 252. VIR, similar situation. Big volume climax. We see an open inside the range of the previous candlestick. 5-minute time frame, what happened? We opened lower, blew right through support, didn't even get a good solid bounce, and we're just pinned down by our EMA 12 for the majority of the day. Saw a quick trend change, but no follow through, overall weakness. So the lessons here are two things. One, I'm covering these tickers because I want people to protect their money. We need to look at what's happening pre-market and learn how we can utilize those key levels to give us an indication of what's going to happen. It's obvious here, guys. You can make a ton of money if you are trading these and you're trading them well. It's all gambling if you're swinging them overnight. But look how much we can move in a single day. If you can go find a beautiful pattern like we see on CGC today on one of these highly volatile and very, very hype-driven tickers, you can be positioned to make a good amount of money. It's just about protecting the money you have and making sure that you and people like your parents who hear about these coronavirus stocks as being good buys don't lose their money. That's what it's all about. Anyway, if you want to learn more about technical analysis and how we do what we do and why I'm so passionate about teaching it to people, please check out TheChartGuys.com, or maybe just email me. I will send you information for free. I don't care. I don't care if you join. I just want people to learn. And for the individual who emailed me yesterday, please email me back. Take me up on that opportunity for a phone call. I'd like to sit down with you and teach you a little bit about what we're doing so you understand what I'm trying to do. And that's it. So follow your chart, guys. Be good and take care of your capital.